First, like I was mentioning, a bit of a sideways trading pattern we've seen recently. What's your thoughts? Because I get a sense that if we don't see a catalyst, there is a real risk that come January we might see this market come down.
You're absolutely correct, Wole. A couple of things are playing in at this particular period in the market. One, lots of investment managers are closing their books for the year. So you definitely don't see a lot of buying appetite in the market right now. And like you rightly mentioned, if there is no catalyst to move the market, we might probably just see this sort of sideways trend even rolling into the first month of the new year.
Well, what's your general outlook for next year? I mean, we're just about 2-3 weeks away from the end of this year. Are you bullish about next year?
I am bullish about next year for two reasons. One, we are hoping that by the first half of the year, AMCON would have come up on board and bought the non-performing loans from the troubled assets from the banks. I think that would give us a level of boost. You know, we could see some rally in the banks once that happens. Another thing that could be exciting again is come February or March, we could be seeing full year results for the financial year ended December 31, 2010. And on the back of that, we expect some better numbers for some companies, and that will drive the market again on another level. Then in the second half, post-election, we expect that the market would kick into full gear.
Well, fingers crossed on that. Let's focus on flour mills. Obviously, a historic transaction which they just completed.
Yes.
They were able to raise 37.5 billion naira in that the first tranche of 70 billion bond issuance program. Correct. I think it was fantastic at 12%. What are your thoughts?
Yeah, really fantastic, I would say, because what now happens is that investors are benchmarking flour mills with close to the federal government. Federal government yields are currently around 11.6. They're about for the 3-year, and then the 5-year is somewhere around 11.1. But during the week of the book building, we saw yields on the 5-year and the 3-year hit that 12% range. So definitely they've shown strong confidence in the company, and of course going forward we think it's a good thing for the company. Yeah,
obviously it's good for the company, but it's a bit amazing. No risk premium at all for corporate. Like you mentioned, sovereign risk is priced at 12%, and there are obviously some people are pricing this bond at 12%. But let's look at the impact that this will have on flour mills as a company. We know that they are looking to put about almost 60% of that money into refinancing some loans and expanding, and of course there's this sugar refinery coming on board.
Yes.
What's the outlook for flour mills going forward?
For us, we have been very bullish about flour mills. We think that this bond issue is a very good one for them. Particularly, it gives them the opportunity to lock down long-term funds at a very attractive rate. Even though what we gathered from the last presentation they had with investors was that their current borrowing rate is somewhere around 10.25%, but we think that is not sustainable, because when you look at inflationary trends, when you look at the CBN stance in the recent MPC, even though the benchmark rate wasn't hiked, but the hike in the asymmetric corridor gives you a sense that the CBN is concerned about inflation, and they would want to tighten rates going further. So we have the opinion that even for corporates, blue chip corporates, that we hear that some of them are borrowing at sub 10 at the moment, but we don't think that is sustainable. Going into next year, we expect rates to hike up, and we expect many of these blue chip companies to be paying far more higher rates than they're currently paying today. So for flour mills, I think it's a good thing, opportunity to lock down long-term funds for some time. And if you look at the investments they are making, we think it's laudable. Forecasts are that the flour business, the flour industry would grow probably around 8% year on year.
Which is the core of their business.
Yeah, which is the core of their business. 3% of that growth is associated with general population growth, whereas the remaining 5% is associated to change in habits. You know, a lot more fast food and restaurants are coming out there. A lot more Nigerians are getting, should I say, if disposable income increases, it's going to, of course, affect that market as well.